Hello, this is Craig Brelsford with Redship Companies. Thank you for joining today's call with GreenPower Motor Company, which trades on the NASDAQ under the ticker GP and on the TSX Venture Exchange under the ticker GPV. With us today, we have GreenPower's CEO, Fraser Atkinson, its CFO, Michael Seifert, and its president, Brendan Riley. We will begin with a brief presentation in a moment, and then we'll open up for Q&A thereafter. For those that do have questions, you can type those in by clicking the Q&A button at the bottom of the screen at any time during the presentation or during the Q&A session. Before we begin, I'll run through the safe harbor statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. And of course, forward-looking statements involve risks and uncertainties. With that said, I now turn this call over to the GreenPower team. Gentlemen, go ahead.
And good afternoon, everyone. While uncertainty over state regulations and federal incentives combined with other global economic factors slowed some EV markets earlier this year, the increase in orders and quotes GreenPower is now experiencing shows that the demand for all-electric vehicles is still there and the market is rebounding with significant growth potential as the industry addresses these hurdles and paves the way for a more electrified and sustainable future. We have the inventory and/or production to meet the increased demand. Last week, we announced deliveries of 5 all-electric, purpose-built school buses in California, with follow-on deliveries this week and into September in California and Oregon. This activity complements our recent announcement on sales on the East Coast. Brendan will discuss our activities in the school bus sector in more detail later on this presentation. We have seen a significant uptick in the past few months with our sales pipeline for GreenPower's all-electric commercial vehicles, including 28 specialty vehicles for deployment in Canada, which would utilize our current inventory of EV Star cabin chassis. This represents inventory we have on our books, generating cash flow requiring little additional cash outflow, markedly improving our liquidity. We've also received orders for EV Star passenger vans, pictured here at the bottom of your presentation slide, in a variety of seating configurations and EV Star Cargo Plus for more than 20 vehicles. We anticipate delivering most of these vehicles by the end of this calendar year. Many of these orders and quotes have follow-on orders providing exponential growth with our sales pipeline. In terms of our competitive landscape, our go-to-market strategy consists of the horizontal market for medium-duty Class 4 vehicles, where we have our own all-electric cabin chassis, passenger vans, shuttle buses, and a range of commercial vehicles, as well as the vertical market for school buses with our Class 4 Type A all-electric school bus and our heavy-duty Class 8 Type D Beast all-electric school bus. Over the past year, there's been an interesting trend in that a number of EV OEMs with medium-duty Class 4 all-electric offerings has been dwindling as measured by the eligible vehicles listed on California's HVIP incentive program. There are fewer Class 4 Type A school buses, fewer Class 4 passenger vans, and fewer Class 4 commercial vehicles listed on the program. We believe this trend will continue. As for mandates, to provide context on mandates, when a customer is interested in a Tesla Model 3 or a Rivian pickup truck or a Lucid Air automobile, they're not required to buy any of these. Because mandates do not exist for light-duty vehicles, growth in the market for these vehicles can at times stagnate. However, mandates do exist for medium and heavy-duty vehicles like Class 4 commercial vehicles and the school buses manufactured by GreenPower. Many states have requirements for school districts to purchase all-electric school buses by certain dates. In states like New York and California, that has to happen over the next 10 years. These two states alone operate 80,000 school buses that represents a market opportunity of $25 billion for all-electric school buses. California has introduced legislation requiring roughly 10% of new purchases of Class 4 vehicles by fleet operators to be zero emission, creating demand for GreenPower's EV Star line of commercial vehicles that we showed you earlier in this presentation. This requirement will increase to 75% over the next 10 years, amounting to a multi-billion-dollar annual market opportunity. We believe this increased demand will flip the supply-demand in favor of EV OEMs within the medium-duty Class 4 space, and that we are starting to see the early days of this dynamic. I'll now hand it over to Brennan for discussion on the operations and opportunities we have in the core sectors we're pursuing. Brendan?
Thank you, Fraser, and thank you all on this call today. 2 years ago this month, GreenPower took possession of its manufacturing facility in West Virginia. That decision to manufacture there was based on the need to increase the company's production capacity beyond California and to the East Coast. Today, the pipeline of GreenPower all-electric, purpose-built, zero-emission school buses and their orders has more than 30 vehicles slated for delivery in California and Oregon over the next 90 to 120 days. Those orders complement the 88 school buses previously announced for the East Coast. So the East-West strategy of manufacturing and delivering product nationwide, as the company envisioned 2 years ago when the Virginia plant was added, West Virginia plant was added, is coming to fruition as planned. The company HVIP program, the California HVIP program is the nation's leading incentive plan for where GreenPower has the third highest numbers of redeemed vouchers. Today, according to listings under California HVIP program, GreenPower is the only OEM that is manufacturing all-electric, purpose-built Class 4 Type A school buses and an all-electric Type D school bus. While that has a significant impact on incentives in California, our unique production capabilities on both East and West coasts, GreenPower is perfectly positioned to take full advantage of the mandates which have been implemented in many states and the more than $8 billion in monies from the state and federal level, all of which are impacting transition to deployment of all-electric, zero-emission school buses. Additionally, HVIP has introduced the Zero-Emission School Bus Initiative with $500 million, which is in addition to existing funding programs from air quality management districts, school bus set-aside funds, and other programs, further increasing demand for GreenPower school bus in the state. Recently, GreenPower was called upon to serve as an EV product expert and thought leader in national discussions on EV school bus deployments. During the major U.S. school bus conferences, STN Reno and Indy, I had the opportunity to make presentations on contemporary materials, methods, systems, and structures for superior EV school bus performance and safety. In Reno, GreenPower was asked to participate in discussions on preparing for the 2030 and increased regulations coming on diesel engines with focus on how to prepare for change via electric products. We also participated in a roadmap conference with the World Resources Institute, known as WRI, looking at barriers to 100% zero-emission school bus deployment and how to overcome them. Later today, the leading national organization impacting policy related to the deployment of zero-emission vehicles in general, ZETA, has asked me to participate in a discussion on the economic impact and workforce implications to the EV industry. But before closing, I want to amplify Fraser's comments on the commercial side of GreenPower's business. Much like the East-West strategy that we have for production on school buses that makes GreenPower more nimble and able to respond to market demands and changes, our combined offering of school buses and commercial vehicles provides the flexibility to weather the conditions Fraser mentioned having occurred in early 2024. We have filled our pipeline, increased our quotes, and have an increase in the commercial demand. Last week, I was at a zero-emission vehicle display and ride and drive in Oakland with CARB and our dealers, where I noticed a much higher interest level of interest in EVs than I had earlier in the year. Lastly, as it relates to our commercial products, during the quarter, we introduced a new model refrigerated box vehicle that utilizes our EV Star cab chassis called the GreenPower Reefer X. This is a modern design that looks incredibly contemporary and uses very, very modern components. This EV Star Reefer X is a purpose-built, fully customizable vehicle with a longer life, lighter body to allow for increased payload, range, and efficiency. Designed to serve the mid and last mile refrigerated and frozen delivery market and catering applications, the EV Star Reefer X moves goods that need to be temperature controlled, such as fresh, frozen foods, flowers, pharmaceuticals, among other applications. The vehicle body features one interior structure, smooth, that makes it inexpensive and easy to ship as a flat pack to our dealers for simple assembly close to where it's going to be deployed. I'll now hand this over to Michael Seifert for his comments. Thank you.
Thank you, Brendan. GreenPower is one of the very few EV OEMs that has consistently generated a gross profit on the sale of our products, as shown on the attached slide. In our most recent quarter, the gross profit margins were lower primarily due to overhead costs incurred on limited throughput in our West Virginia facility, as well as from lower realized gross profit margins on sales of prior model year inventory. We expect the gross profit margins will increase when throughput improves in our West Virginia facility, which will improve the allocation of our plant overhead on a per unit basis. Turning to our liquidity, we raised gross proceeds of $2.3 million before fees and expenses in a unit offering during our most recent quarter. In addition to these proceeds, we continue to utilize our operating line of credit, as well as our revolving line of credit facility with EDC to fund investments in working capital. At the beginning of the year, we entered into a revolving $5 million term loan facility, and as well as a guarantee for letters of credit for further $5 million with Export Development Canada. This is EDC. Both the facility and the letter of credit guarantees are used to finance the production of GreenPower all-electric vehicles pursuant to existing customer orders, and these have been instrumental in our transition to our inventory management. As of June 30th, we had nearly $2 million in available liquidity on the EDC revolving credit facility, and we have continued to utilize this facility to push forward production for existing sales contracts since our quarter end. This facility continues to be an important source of capital for our company. Many of the opportunities we're currently working on involve sales of existing finished goods inventory, which only require very limited additional capital outlays. Finally, we've been fortunate to have the continued support from GreenPower's directors and officers who have provided important and much needed financial support for our company. I'll now turn the call back to Redship, who will open us up for Q&A.
Thank you very much, everyone. If you would like to submit a question, all you need to do is press the Q&A button and then type in your question. Because there are a great many people on this call, we will take your typed in questions only. We've already got some here. How long might it take for the public to accept the importance of commercial electric vehicles?
Well, I guess I'll start off and then let Brendan round out our response. The market we're dealing with is medium and heavy duty, which I believe gets a lot less press and media coverage than the Teslas of the world, Lucid, Fisker, Rivian, and so on. And so a lot of the media coverage, if this question is in part related to that aspect of the adoption of electric vehicles, was super positive 3-4 years ago and has turned decidedly negative over the past year or two. But in our space, and as we talked about earlier in our comments, is that we're dealing with a sector where both on the commercial vehicle side and the school bus, both at the state and federal level, mandates have been set for adoption. So people aren't looking at buying because they'd like to buy. In many cases, people are now engaged with us because they have to buy. And I think that is a big, big difference that is certainly part of our strategy, that we're going to where the mandates are and where the money that is there to help support those mandates, because you need both. So you can have an approach that dictates a requirement with a mandate, and we've seen various countries and geographic areas in the nation that have tried that without success if they can't support it with some level of funding. So in the space that we're in is that we are seeing adoption in the school bus space, in part because it is being driven by mandates. In the commercial vehicle space, we had expected a greater level of adoption this year in California because of the mandates that were introduced for this calendar year. But what we're seeing is that people, and this is human nature, are waiting till the end of the year or the early part of 2025 when they have to report what their results are with respect to those mandates for the 2024 year. But these mandates they're in place, they're increasing, and they're only going to help our adoption level. Brendan, I know you and I talk a lot about this area, but anything to add?
Well, to add to this, the medium and heavy duty space, I think, has got a longer adoption curve than maybe the consumer car space. A lot of it has to do with the infrastructure limitations. The reason GreenPower has really focused on the Class 4 space for electrification of the medium duty market is that it can leverage existing level 2 charging that you and I may have at home, or that's readily available through public areas. So our concept is car-sized batteries with meaningful payload and meaningful range. So 150-mile range, 7,000 pounds on our CC payload, which is best in class, again, with a smaller battery that limits the cost of the vehicle and then allows it to be charged more readily with inexpensive and already existing level 2 charging infrastructure. Also has level 3 charging available as standard on the vehicles, but being able to leverage that overnight charging piece, we think is a huge advantage over a lot of the competitive products and other vehicles in our sector.
Thank you, gentlemen. Next question. Workhorse had an analyst note. They had a going concern warning. What would be the liability for GreenPower?
So we have only delivered a total of 10 vehicles to Workhorse in the past year. So that's since June of 2023. So this represents less than 4% of those revenues. So Workhorse is not, a major factor in our current sales for the past year. And so, we don't believe that, what is happening at Workhorse's organization is really reflective of our current and go-forward prospects. Fraser or Brendan, is there anything further like that?
We did that. We had delivered over 300 vehicles, which is great because it helped establish our platform in a very, very substantive way, helped us as well. We have some cabin chassis available for delivery if they don't take them. If they do take them, it's a bonus. If they don't take them, We need them for our Nano BEAST production. We need them for our EV Star Mobility production. We need them for our EV Star box truck. So right now, it's a scarce commodity within our organization, and one that really is an opportunity and has no underlying liability attached to it.
I have nothing further to add to either of those comments. Thank you, Fraser and Michael.
Thank you, gentlemen. If you have $33.7 million in inventory, isn't that too high? Aren't these buses which are sitting on the lot?
So I'll start here. So we, of that 33.7 million, approximately 13.4 million of that is finished goods. And so those finished goods are comprised of the whole range of buses in our portfolio. So school buses, both the Type A and Type D, as well as a number of different types of EV Stars, and as Fraser mentioned, as well, EV Star cabin chassis. And those EV Star cabin chassis can be built into other types of vehicles. So the remaining 20 million is comprised of about 4 million in parts, with the remainder in work in process. So that work in process, some of those are vehicles or Type D buses that we're building in our West Virginia facility, and that's for a contract with the state. So those will be sold as soon as they're completed. We're also utilizing contract manufacturers, and so we have production in various stages throughout our supply chain. So to answer your question, no, we think this is appropriate. While we always try to manage this, and we're certainly focused on selling finished goods inventory, we don't believe this is an excessive level at these levels. I'll open it up, Fraser, Brennan, if there's anything further to add there.
I think the point to add, and that was a great summary financially and in terms of our fiscal responsibility around this area. Where we were 3 years ago was we were just getting into sales of we had sales of our larger Class 8 Type D school bus, but we were just getting into the Nano B school bus sales. So as such, in order to compete, we needed inventory. And in certain areas, as we developed out our EV Star product line, same thing. We needed the cabin chassis and we needed certain products, and they needed to be in the yard available for sale, number one. And number two, in responding to requests for proposals, they needed to see that not only did we have the capability to produce, but we had the vehicles available to deliver. That's changed. The competitive environment's changed, and our model has changed. We now have a lot of orders. We now have the ability, and as such, we've spent, Michael, Brennan, myself, and others in the team have spent a considerable amount of time, remodeling or restructuring our business so that now we're more aligned with production pursuant to customer orders. And as Michael referred to earlier in his remarks, the EDC facility we have, which is a very unique facility around production. Typically, those facilities are geared toward, when you do an operating line of credit, you need finished goods inventory and you need accounts receivable. When you have production financing, you need a financing partner that is willing to pay for suppliers very early on in the supply chain. So having the $5 million or up to $5 million production financing and up to $5 million of guarantees on LCs has been very, a key part of the process of shifting from, producing to inventory and selling from inventory to where we're now into a production pursuant to customer orders. So over time, as sales grow, we don't need to see an incremental growth in our inventory. So we agree that 33.7 million, as we sit today, that we can operate on a revenue basis with a lower level of inventory with a higher level of revenue.
Thank you very much. Next question. Presidential election this year in the United States. Gentlemen, are you concerned about a change of administration in the federal EPA?
We'll make it more holistic. In November, there could be a change in the House or a broader mandate in the House for the the current House ruling party, so to speak. There could be a change in the Senate. There could be a change, not just in terms of the president, but in terms of mandates set by the administration in the different departments. And there could be changes within the EPA. So with the school bus program, our approach has been to treat it as a one-off. To the extent that we get a contract or an award, we deal with it or are dealing with it in terms of a production and delivery schedule that does not leave us exposed. And so what we were talking earlier about mandates and money is predominantly at the state level. Earlier on, I commented on the number of school buses in the state of California and New York. The mandates were set by the states, not at the federal level. The money from California comes from their cap and trade program. They raised last year approximately $7.6 billion, of which over $4 billion went to California Air Resource Board. And that is what is funding the various programs that we are beneficiaries of, whether it's the Air Quality Management District programs, the new ZESB, $500 million this year alone program that Brendan referred to, the school bus set-aside program, which is $130 million a year, or the ongoing funding for HVIP, where we're the third largest awardee for the 10 years that program's been in operation. So I believe we are, our strategy is well placed in terms of, the fact that there very well could be multiple changes this November that will impact on what, the mandates and requirements are at a federal level. And the approach we've taken is to not bake any of those into our current business model.
Next question, gentlemen. Any problem regarding the availability of lithium batteries? What percentage of manufacturing cost is the battery?
We don't disclose the latter, but I'm going to let Brendan talk about the former.
Yeah, we've actually not had a huge issue with sourcing our batteries, and that has not been one of our main supply chain. Everybody in the industry has suffered from supply chain issues on some level, but for us, batteries have not been a big issue.
I think this would be an appropriate time to give a shout out. I'm not sure she would want me to name her, but she has done a absolutely outstanding job in managing our supply chain in terms of all aspects of it. And we have a very complex supply chain for where we are in our business. And I looked at the deals she negotiated for the cells, and initially I was under a little bit of shock in terms of the percentage increase. But when you look at the spot price of lithium carbonate, which really is the ultimate driver of where the prices are going to be, whether it's lithium ion or in our case we use LFP or lithium ferrous phosphate is our chemistry in our batteries, is that she negotiated a deal that was both in terms of the price increase or the lack thereof and the term that was unequaled in the space. She did just an amazing job. And so that's part of it, is that having the relationships and having the partners in your supply chain is a key part of being able to manage your overall price on your products.
Thanks, gentlemen. Related question. How does the cost of a BEAST and other buses compare to its similar internal combustion engine equivalent for school districts in states without mandates and that likely won't have them in the foreseeable future? Upfront price will be a huge factor.
Yeah, upfront price is a factor. We are always trying to limit our cost as double the price of an existing legacy vehicle or less. And with our school buses, we are right at that number. The payback on that vehicle. Of course, it's going to vary for, what the cost of electricity is and local cost to support a vehicle. But there is a return on investment that can be calculated, especially over time. Now, as far as, what our competitors provide and the competitive landscape, we believe we have the best value products for what we're offering right now. And frankly, we don't know of anybody who's got a better priced product that's in our same category that's really competitive.
Thank you very much. Your Type A Nano Beast has the best range and payload in class. Is the Nano Beast the product that you expect to generate the most interest from?
It really depends. Certain states and certain districts favor certain types of vehicles. That's what they're looking at and what they're deploying currently. I would say, for instance, if we looked at New York, the Nano Beast is probably the most attractive product in our product line as far as a school bus is concerned. But in California, the Beast seems to be the most popular vehicle. And again, these change as districts start deploying. They might have restrictions as far as the amount of charging they've got available. Then the Nano Beast starts becoming more and more attractive. We also have a product called the Mega Beast, which has double the size battery of the Beast. So instead of roughly 200 kilowatt hours, it's got 400 kilowatt hours. And this is very compelling on the level that not only does it have more climbing power with this additional battery, it can actually climb bigger hills, and attain higher speeds for longer periods of time due to its power density and such a big battery. It also makes a lot of sense for range, going up to 300 miles. And then for vehicle to grid applications, where we've got customers that really want to leverage the battery in their bus as a fungible way to store power and be able to export power to the grid or to a load of some kind. The Mega Beast makes a lot of sense. Vehicle to grid, like charging infrastructure, is very expensive. You usually have one charger per vehicle. And since we've got double the power of anybody else's bus that's out on the market right now, well, most of the other products that are out on the market right now, this allows it to be a great investment as the infrastructure is expensive. And now you've just got a whole lot more battery to leverage to really offset that. Also allows for tractive efforts, be able to transport students in the morning, in the afternoon, and still be a good product for vehicle to grid applications. So the real question is, what is the vehicle just going to be used for transportation? Is there additional value to this V2G component? The utilities seem to think so, as they're starting to invest in actually this technology. And we think that even though the incremental cost might be greater on the purchase of a school bus, long-term, we believe that there's a savings, and possibly with this ability to be a fungible power source, we think that it could be a savings from day one with the purchase of this more expensive vehicle.
Yeah, just to go back to the initial part of that question on the Nano Beast, is that we had our Nano Beast with our dealer for the state of New York in Times Square over a year ago, where we did ride and drive event for a lot of their customers, for school district superintendents and the like. And while we were driving around the Times Square area and beyond, all we saw was Type A school buses. We didn't see a single Type C or Type D larger school bus and we saw dozens and dozens of ICE Type A school buses. So, that's a great example of a very target-rich area that is in a tight geographic area. The second factor is that the Nano Beast, which is pictured, we put our slide back up here that shows that the Nano Beast is built on our EV Star platform in the middle there. And so as discussed earlier, we have, base inventory of cab and chassis, so we can build these that much quicker or a lot faster than the Beast or Mega Beast school buses. And most importantly, as Brendan talked about with the EV Star platform, we can charge these with either a basic level 2 charger, which are becoming very ubiquitous, or a DC fast charge. And the first time we did demo drives of our EV Star in New York back in 2019, there were all of 2 level 2 chargers available on the island. That was it. Now it's a little better. It's not like California, but charging infrastructure is a huge issue in the city. So once again, the Nano Beast is easy to install, easy to operate, easy to deploy. For all those reasons, personally, I get very excited about this product in markets like that, where it is really a all-in-one solution.
Thank you very much, gentlemen. We have many questions out there. Thank you very much. We likely won't get to them all today. You can send your questions to us at gp@redchip.com, gp@redchip.com. We will, though, try to get to as many as possible now. Why do you think Bluebird is outperforming you in the stock market?
They have done very well. And I mean, you look at their last couple of quarters, it certainly provides for, a great, I won't say template, but, a great path for where we want to go. Fortunately, in our case, our burn rate is, we've set ourselves up with a manufacturing light approach, which requires a much different capital expenditure than they do, and ultimately a lower allocation to our cost of goods sold. But I think most importantly, we need our goal by the end of this current fiscal year, ending March 31st, 2025, is to get to 50 to 60 school buses a quarter. The equivalency for Bluebird is to sell. They need to sell thousands of school buses to have a similar impact on the bottom line as we would have with 50 to 60. And of course, with some of the other sales from commercial vehicles and the like. So I think we're a pure EV company. We don't manufacture and sell vehicles that have internal combustion engines. Our vehicles are purpose-built. So we have, which Bluebirds, they're using existing designs, existing chassis. And so there's some distinct differences between our business and our business model and Bluebird. But hats off to Bluebird is that they've, really turned their business around in terms of, generating a decent EBITDA per quarter.
Next question. This is pretty exciting in that there do not seem to be many competitors for the vehicles types you're building out. Have you had customers asking for electric camper vans or RVs?
The challenge is that, as we've talked about with our strategy, is that midterm, long term, we believe we're best served really sticking to those areas that require the types of vehicles that we're producing and have the funds to support the acquisition by those dealers or customers. RVs right now don't have any mandates. There isn't a requirement to buy them. So this is better suited to a follow-on market opportunity for us than necessarily, fitting in with our current strategy. So, and we also have a number of members in our team that would love us to have a RV out there because they would personally like to buy one. But going back to our strategy, you have to be careful of all the different products you bring to market and how you can properly market them. So we're, in terms of our stage of development, we have to be careful we don't get overly committed with too many products that are perhaps too early days in the marketplace. And so we believe the markets that we're in right now, there is a ton of business that we have and that we've crystallized with current orders and qualified leads, and that is growing each quarter.
Thank you very much. We are now coming close to the top of the hour. Gentlemen, I'd like to give you an opportunity to give us the essential value proposition. What is the reason why an investor should look at GreenPower Motor right now?
Before getting into this, Craig, I noticed, and we'll have to get back, there's a lot of great questions we're leaving on the table. So it's unfortunate because I think the three of us would love to go through all of these. There's a bit of a theme in terms of capital investment. And I think we can perhaps comment on that in a more holistic fashion. When we got into the West Virginia facility, we had looked at dozens of different production facilities in numerous different states, and we quickly came down to a strategy that we needed a production-ready facility, and we needed partnerships at all levels of government. And if we could get both of those and get buy-in, that would help really, drive that that objective in terms of having, a facility that could really drive our school bus production, get the East Coast representation, have the ability to deliver and support in the locales that we were dealing with and that was growing. So within all that, within West Virginia, we were able to negotiate a deal where they bought that facility we're in right now. And when I say they bought it, it was production ready. And we had one of our key contract manufacturers spend time with Brendan and I in that facility. He kept coming back to us saying, how did you, this is great. This is exactly what you need. So a big part of it already had the CapEx built in. So instead of spending tens of millions or even millions, we knew going into that our requirement, setting aside the paint booth, was in the hundreds of thousands, which we've already spent. And so going forward, it's now a matter of building up and increasing the production throughput in that facility so we get the kind of economies of scale that we believe we can get out of that facility. But going back to that deal is they paid the full amount up front, and the deal is that we now pay them $50,000 a month in lease payment, and it's a contract to lease purchase, so that each of those $50,000 gets applied in full to the original purchase price they paid, no financing costs whatsoever in that arrangement, and plus there's some employee incentives that could further reduce that purchase price. So eventually, when it gets paid down to zero, the title or deed gets passed over to GreenPower. So I think that is when I look at the competitive landscape with the companies we compete with, nobody else has done a deal like that. And to some extent, the way they're structured and the way they build their product, very few others could. So back to you, Craig. I did want to address that because it seemed to be a theme on a couple of the questions that we didn't get to.
Absolutely, Fraser. And we are collecting those questions and are supplying them right now to the GreenPower team. So thank you, everyone, for joining today. Again, I'll give you that email address if you wish to reach us with your question. It's gp@redchip.com. You may also call us at any time at 1-800-RED-CHIP. That's 1-800-733-2447. Also, please visit the information page created by RedChip for GreenPower Motor. It's greenpowermotorinfo.com. There you can view and download the investor presentation and fact sheet and sign up for news alerts on GreenPower Motor. Register for RedChip's forthcoming webinars at redchip.com events, redchip.com/events, where you can also view an archived version of today's GreenPower webinar. Thanks once again to our many participants today, and thank you, GreenPower team.